Moving on with our second part here on the project that we have on Binary Options Academy, and that is buying strength and selling weakness. So basically buying call options when the market reaches a top, or buying put options when the market reaches a bottom. And of course, when you trade binary options, it doesn't mean that you have to put all your money into one shot. I'm talking about all your money into one single binary options, but respecting some rules and everything that we've discussed here, then in the end you'll have maybe 1 or 2 options to expire out of the money, but other than that, the rest of them, 2, 4 and 6 options will just be enough for a profitable strategy and situation. Now let's look at the market here, and let's assume that we are continuing our analysis here, and just like that the market goes and reverses, and our area here that was important, support area, remember it was resistance, then resistance turns into support, it is being broken by now. Now what do you do when the market goes and breaks the previous low? So buying, remember, buying strengths and selling lows. But this is a nice place to go and buy put options by the moment that the lows are being broken. So this would be a nice place to go buy put options, and then to buy put options every time this area is retested. Why? Every time this area is retested, because it is exactly the same principle that we've discussed on the move to the upside. Well, exactly the same principle is applying here on the move to the downside. And then the market goes, we have no previous low here to buy put options, making a low here, making another low here, another low here, and so on. Consolidate, and just like that, it doesn't make any other low. But now, where would your stops be if you were selling the euro US dollar all the way from this moment of time after the ECB? If you were selling the euro US dollar on the regular currency market, where would you put the stop loss? Because from my point of view, the stop loss are in this area here, and basically a breaking of 136.60 and 136.70 would be the right, let's say, a moment or place to go and buy call options again here. Why? Because these are previous highs. This is a 4-hour chart. Previous highs here still mean almost 100 candles back, so that means almost 400 hours back. So you divide them and find out the number of days, and you will see that this is still an important area here to be broken. So by the time the 36.60 or 70 area is coming, normally we should go and buy call options, and every time the market is going to go and revisit it here, so this area like this, exactly on the same principle like this, every time the market is coming to revisit it, because probably they will come to revisit this area here, it will be just an opportunity to go and buy some call options again for yet another move higher. When the market forms a consolidation here, by the moment that the highs are being broken, we are buying strength. Remember, while here we bought weakness, or basically we bought put options, here we are buying strength, and we should and we want to buy call options. Whenever you look for price to move to the upside and you're trading binary options, then you should go and buy call options. Whenever you look to the downside, you should go and buy put options. Well, this is a practical example on how to trade binary options based on not supply and demand, but based on levels and broken specific highs or lows. And thank you very much for your time. This is on Binary Options Academy project. We'll move on with our next analysis in a couple of minutes. Thank you very much, and bye bye.